So you're trying to rebuild credit, or you have no credit and you need a lot of points fast. I got an option for you coming up. Hey everyone, if you've been trying to work on your credit and you have barely been seeing any results, you need to go ahead and take a look at the workshop that I just opened up that is currently free so that you can learn where you went wrong while you were trying to work on your credit. During that lesson, you'll learn the 4 don'ts when it comes to working on your credit, the mistakes people make when writing dispute letters, why you shouldn't only dispute with the credit bureaus, and also the accounts that people waste time disputing. Not to mention, you'll get to see real results from a customer who used my methods and they were able to get their credit straightened out and bought a brand new home within 7 months. So go ahead and sign up for that training today. The link is going to be down in the bio. And while you're trying to work on your credit, you have to see all 3 of your credit reports and scores. And My Score IQ, a company that I use for myself and for all of my customers, has a $1 7-day trial so you can see your credit reports and scores so you can know where you stand, because you can't work on your credit without knowing what's going on all 3 reports. So please check out My Score IQ. The link to them is going to be down in the description as well. Hey everybody, this is Will Fresh, your credit expert, bringing you credit tips to get your credit back on track, because what goes down must come up. And today we're going to be talking about a credit building option that on average gets their customers anywhere from 38 to 90 points. We're going to talk about all the benefits of it and how it can help you along your credit building journey. So that option that we're talking about is Credit Strong. Now, Credit Strong is an installment loan type of credit, and they actually help you save money while you're trying to build money, and they do it for as little as $15. Yeah, I know that's not a lot at all for a loan. They also have no credit check, no inquiry, and it doesn't matter if you don't have a credit score. So yes, they open up the door for a lot of people to be able to get this credit account and try to build up their credit. Now, I tell people that this is really good for you if you are trying to save up money for the down payment on a car, a down payment on a house, or just because you want to try to build up a savings and you want to build up credit at the same time, because this account actually does both for you. They even have an option that's good if you're trying to build up credit in order to get business credit for your business. And just to be clear, it helps you build up your personal credit for those purposes. Now, this account will help you out the most if you don't have any history of any loans on your credit, or also if you're trying to build up credit, but it will help you the most if you have not had any type of loan on your credit report. Now, why is that important? Because it's important to have a good mix of credit, meaning different types of credit. Loans, credit cards, mortgage loans, different types of credit can help build up your credit score. So without any further ado, we're going to go ahead and go over to the computer screen so I can show you guys Credit Strong and show you why and how it can benefit you in a bunch of different ways, from building credit to saving money. Hey everybody, we're over here at Credit Strong, and we're going to go over this product so you can get some more information on how this product can help you with your credit. Now, Credit Strong has a bunch of good factors to it. It is a loan, but this loan can actually help you build credit. It can help you save money, and it can also help you in the business arena as well. But I'm going to go through all 3 of those things to try to show you how this can be beneficial to you. So we're going to go ahead and scroll down here and just get a little bit more information about what they're about. It says here, build credit without a credit card. I do still always recommend that credit cards help your credit better and faster than loans do. But again, this product does have its own benefits. And you can see here you can apply in minutes, and you can get a bank loan placed on your credit, and it will be FDIC insured in a savings account, the money that you're paying towards this loan. You make small monthly payments, which is very good for people that need something and they may not have a whole bunch of funds available, but they have options for people that do have more available funds to build credit and to save. They also give you the option to track your progress as far as your credit score, and they give you a FICO score too. And it's important to always know what credit bureau your FICO score is getting pulled. There are a lot of places, credit card companies and other places, that give you a credit score, but you always want to know what bureau they are pulling that score from, because you can't just generate a credit score without having the information on a person's credit report. The only place to get that information is from a credit bureau, so you need to know which bureau they're pulling that information from so that you know what your score is at that particular bureau. And after you've paid off all of your payments that were scheduled, you will be able to unlock that savings account that all the money was going into. And you know, if you have to cancel, they do allow you to do that, but They basically lock it for you to make sure that you don't use that money until you are done, so that you can save and reach your savings goal. So what we're going to do now is we're going to go ahead and take a look at some more details on this account. As you can see, they have 3 options: subscribe, build and save, and Magnum. And we're going to go through all 3 of them. We're going to start off with this one because it is the one that is the best middle road, and it will really help you save more, and I'm going to explain why in a second. If you look here, you can see that you have the build and save 1,000 in 24 months, so save $1,000 in 24 months. Right here you got the build and save 1,000 in 12 months, and build and save 2,000 over 24 months, and you can see the 3 different payments here. So as you can see, this is the same amount, $1,000, but you see the payments are different. But the reason why this payment is more is because you're reaching your savings goal in a quicker amount of time. They have 12 months, so of course you have to put more money in monthly in order to reach that goal in a shorter time frame. As you can see, fast track your savings over 12 months. You get an installment account. You'll build 12 months of credit payment history, and you can cancel at any time with no penalty. So we're going to go ahead and dive a little bit deeper into the details on this account. As you can see here, they have those options listed again up here at the top. And when you look at this, they say it's to build credit and have targeted savings. So if you guys are looking to try to save money for a down payment on a house, down payment for a car, or something like that, this can help you along that savings goal, and it can also help you build credit at the same time. And again, we're going to go into those other 2 options in just a second for when you're dealing with trying to build your credit for business credit, or if you need a lower cost option to try to just build credit. But first, let's get into some of the details on this so that you can kind of see how this works. We're going to look at the one that's $1,000 in 12 months. So as you can see here, to get started, there's a one-time non-refundable administrative fee of about $9. Now, if you say you don't have the $9, I'm betting that somebody has Netflix or Hulu and you pay this much to watch TV, so there shouldn't be an argument on whether or not you can afford to pay $9 to build up your credit. So we're not even gonna go there. But looking at what they have listed here, monthly payments over the 12 months, $89 the whole way through. Now if you look at the monthly savings progress, out of that $89, you're gonna be saving $78.73 on your first month's payment. And you do pay interest, which is what goes to Credit Strong, of course, for them providing the service to you. And if you look at it, you're saving 88% of the money that you put in with that first payment, and that is a pretty good amount. And also, if you look at the chart, you can see that the amount that you are saving goes up with every monthly payment, and the amount that you're paying in interest goes down with every monthly payment. So every month you are saving more and more of that money that you're actually putting in until you get to that $1,000 goal, which of course is great. And if you go down to the next plan, $1,000 in 24 months, you can see that the savings percentage of your payment isn't as much on this plan because of course you're putting in a lot less money and it's spread over more months. So it does still increase as far as the number that you're saving, and it does still decrease as far as the number of the dollar amount of interest that you're paying, but it's just going to do it at a slower rate. And the same thing applies when you go to the $2,000 for 24 months, as you can see. But again, this is still the best option that they have for saving because of the percentage amount that you are actually putting towards savings with every payment that you pay. So now let's go ahead and take a look at one of the other options. And also, while we're right here, you can see that every plan is no risk. You don't have to have a credit score. There is no upfront security deposit. The only thing you have to pay is that little administrative fee. There is no credit check, so it's a very easy approval. Cancel anytime at no cost, and you will not get a soft inquiry or a hard inquiry by using this account, which is very good for people that don't have credit, for people that have really low credit scores or a lot of damage on their credit report. This is really easy to get because if you try to go to a bank or a credit union, they will still run your credit in almost every case, and this is a lot easier to get approved than that. So moving on, we're gonna go here to the Magnum really quick, and then we'll go to the lower cost option. So with the Magnum, this is designed for people that are trying to get business credit. Now they have a $4,500 option, $9,000, and $18,000, and you can see that these monthly payments are a good ways larger than the other ones. Now they say that this is to supercharge your personal credit for business purposes. Now, the reason behind these high dollar amounts on this is because when you're dealing with business credit, it benefits you to show that you are able to handle larger credit obligations. So that's why the dollar amounts are a lot larger on these, and of course that's why the payments are a lot larger on these. So I know that to be true when they are looking at your business credit to approve you for business accounts. Now, I'm not 100% sure on how much this weighs in on personal credit, because personal credit approvals are based on different requirements, and there are different things that are looked at when compared to business credit approvals. And like I said, I know with business credit, they will look to see if you're handling large accounts. And I know there are people out there that say that you can get those little small vendor accounts and maybe spend $50 or $100 to build up your business credit, and then they think they can go and get like a $20,000 business loan after they only spent $50 or $100 on something, which isn't necessarily true. They want to see that you've been able to handle larger credit obligations, which is the reason for this. But again, when they check your personal credit, like a personal guarantee for the business loan, I'm not 100% sure that they look at the dollar amount of the stuff that's on your personal credit versus your business credit. But according to what they say here, it is an important factor, and that is why they have these type of loans. Now, when we dive in to go look at some more details on these, we can see here that on, let's see, the first one, $4,500, when you make the monthly payment of $49.50, only 58% is going towards savings. So you are still saving money just like you are with the other loan options, but it is a smaller percentage starting off, and it does change and go up a decent amount. So that's not bad, and the interest expense does go down a decent amount as you go along with it, but these are over years. They have longer payment terms on these type of loans because of the dollar amounts of them. So you will see that when you are looking at these loans. But again, you know, a good option to try to build up your credit and show that you can handle larger loan obligations. Now we're going to take a step back for a second, and we're going to go ahead and go to the option that does talk about the low payment amount. But while we're right here looking at the questions that most people have, what is a Credit Strong account? Is basically a fusion of a secured consumer installment loan and a savings account. So basically saving money, as we already mentioned. How does it work? Well, we already know information about this, but just in case you didn't know, Austin Capital is the bank that provides this service of Credit Strong, and they actually fund the loan and report the credit. This is who you would see on your credit report, and they also house your savings, so you can look up that company and see reviews on them. They do have decent reviews, and this is just a few more details about the account. Is it legit? Because you know a lot of people care about if it's legit or a scam, and here they say, you know, they are a 5-star rated FDIC insured Texas State Savings Bank. And again, you can Google this information for yourself. And what credit score do they provide? They provide FICO 8 credit score, because there are multiple versions of FICO, which most people aren't aware of. And then it is the TransUnion credit bureau that they are pulling that from, so you can know that the FICO score that you see from them is coming from TransUnion. Another thing that's important when you're trying to build credit is it being reported to all 3 credit bureaus, and Credit Strong does report to all 3 credit bureaus, which is very good, because if you're building up credit, you want to make sure that you're building up on all 3 at the same time. Kill 3 birds with 1 stone, so that you can make sure that all your good activity is being reported all at one time, helping all 3 of your scores. So that is great information. And if you need some more details, there are more FAQs on this site, and you will have a link to this, of course, in the description for Credit Strong, so you'll be able to check this out for yourself. This is the low cost option that's easier to get into. Now with this option, it does not have as large of an amount going to your savings as the other options, but this is a good way if you just need to build up some credit. It's an easy, quick way, low cost way to get into building credit with an installment loan. And now I will tell you that the dollar amount of the loan does not affect your credit score greater or lesser. So it doesn't matter if you have a $5,000 loan or if you have a $1,000 loan. It isn't going to give you a bigger boost to your credit score just based off of that. There are other factors that do affect your score, and just to show you how this would affect your score, basically, if you've never had a loan before, it is very important for you to do something like this to try to get a loan, because it will help in the credit mix. This is the FICO score pie chart, and credit mix is 10% of your score. Now this 10% is basically how many different types of accounts you have. Do you have credit cards? Do you have loans? Do you have other types of credit? That's what credit mix is. So getting a loan where you have not had one will help with your credit mix. Of course, while you're making payments on the loan, it will help with the 35% of your credit score, which is payment history. As far as the amounts owed, once you start paying down that loan and get it down to a small percentage of the original loan amount, that is going to help your score, because the less that you owe, the more it helps your score. Now, the fact that there aren't any inquiries means that new credit, the 10%, isn't going to really affect you too much because of the inquiry portion, because you're not going to have an inquiry on your credit. But of course, a new account does affect the average age of your credit report, so that can affect your credit history. But as that account gets older, it'll start to help you more in this 15% area of your credit score. But now let's get back over here to the loan. So $15 a month is a $1,000 option, and then they have a $30 a month, which is a $2,500 option. With both of these, again, they have long terms, 120 months up to 120 months. So of course you can pick lesser, and that would change your monthly payment amount if you have a shorter term. So just be aware of that. But when we look at the details on these, you can see that it's basically an easy, low-cost way for you to get in, because out of your $15 payment, only $4 is going in to savings at the beginning. That's 29%. As you can see, these percentages are a lot lower than the other types of loans that they offered. So with this one, if you just need to build up credit, this would be a good way for you to start building up some credit and save a little bit of money at the same time, but it would take a longer time because of the terms that they have. If you are really looking to try to save money and build your credit at the same time, those other loan options are going to be better. And you can see here with the $2,500, it is a little bit more that you will get percentage wise, but it is still a lot lower than those other options. So again, if you want to try to build and save, the option that you would want to go with on this company would be build and save. If you're trying to build up your business credit, this would be a way to start building up and showing that you can handle larger credit obligations. If you just need a quick way to start building up credit some type of way and save a little bit of money at the same time, then the subscribe option is going to be the best option for you. So hopefully this information was helpful. We're going to go ahead and jump off the computer now and finish the video. Okay, you guys, I'm glad you sticked around until the end. Hopefully you got a lot of good information out of that, and you saw some benefit and some use in how you can use Credit Strong to try to build up your credit and also save some money at the same time. If you know of any other good loan options out there, please put them down in the comment, or anything else that will be good to help people save money, put that in the comments. And I'm gonna go ahead and send you guys to another video that I have with an option for building up your credit that is guaranteed approval, $5,000 credit limit on a credit card. So you guys check that out and let me know if you have any other questions. I'll see you guys next time.